Hey everyone, and welcome to the Deep Dive. We're going deep today on a book that's over a century old.
Oh, wow.
A century old. Trust me, this is relevant.
Okay.
We're talking about The Theory of Money and Credit by Ludwig von Mises.
Now, you might be thinking, why are we going back in time to 1912 to talk about money? But this book, it's not just about dusty old economic theories.
Right.
It challenges us to rethink
Yeah.
the foundations of our financial system and ask some pretty big questions about where money comes from, how its value is determined, and what happens when governments try to play puppet master with it.
I'm intrigued already.
Yeah.
So this Mises guy, uh, was he some kind of radical revolutionary in the world of economics?
He definitely shook things up.
Okay.
Mises was ahead of his time in the way he approached money.
Hmm.
He believed that it had to originate organically in the marketplace,
Okay.
driven by individual choices and actions,
Mhm.
not from some top-down decree by a king or government.
That's a pretty radical idea, especially for his time.
Hmm?
So how did he see this whole process of money emerging from the marketplace?
He used the example of gold.
Okay.
Now, gold wasn't valuable because a king said so, right?
Right?
It was valuable because people desired it
Yeah.
for its beauty, its durability,
Yeah.
its uses in jewelry and industry.
Uh-huh.
This desire existed long before gold became money.
Okay.
It was traded as a commodity,
Right.
and because of its desirable properties, it gradually evolved into a widely accepted medium of exchange.
So money is essentially born out of the needs and desires of the people,
Yes.
not from some government mandate.
Exactly.
That's pretty mind-blowing.
Yeah.
But if its origins are in the marketplace, how do we determine the value of money?
This brings us to one of Mises' key insights, the concept of subjective value.
Okay.
Simply put, the value of anything,
Yeah.
even money, isn't fixed.
Okay.
It depends on how much individuals value it at any given time.
Right.
Think about it. You wouldn't pay the same price for a bottle of water in the desert as you would at a grocery store.
Right. The context changes everything.
Yeah.
So the purchasing power of money fluctuates based on individual perceptions of its worth.
Exactly. And this is where the quantity of money in circulation comes into play.
Okay.
The more money there is sloshing around, the less each unit is worth.
Hmm.
Think about it like this. If everyone suddenly had $1 million,
Yeah.
wouldn't that $1 million buy you a lot less than it does today?
Whoa, so too much money can actually be a bad thing.
That's right.
It's like having too much of a good thing can make it less valuable.
Yes.
Is this where we get inflation?
You nailed it.
Okay.
Inflation is essentially too much money chasing the same amount of goods and services,
Right.
driving prices up.
Hmm.
And on the flip side, if the money supply shrinks,
Yeah.
we can get deflation, which leads to falling prices.
This is fascinating stuff,
Yeah.
but it also sounds a little dangerous.
It can be.
What happens if governments try to control prices or manipulate the money supply?
Mises was very critical of such interventions.
Okay.
He believed they often backfire
Hmm.
and create more problems than they solve.
Yeah.
Think about press controls.
Right.
They might seem well-intentioned, keeping essential goods affordable,
Right.
but they can lead to shortages, black markets, and a
Uh-huh.
whole mess of economic distortions.
So even with the best intentions, meddling with the natural forces of supply and demand can have unintended consequences.
Yes,
It's like trying to force a square peg into a round hole.
exactly. Mises was a strong advocate for free markets.
Okay.
He believed that allowing the forces of supply and demand,
Right.
driven by individual choices,
Mm-hmm.
to determine prices and allocate resources was the most efficient and effective system.
Okay, so we've got this idea of money originating in the marketplace, its value being subjective, and the dangers of government manipulation.
Right.
But where do banks fit into all of this?
Yeah.
They seem like pretty big players in the world of money.
They are,
Yeah.
and Mises saw them playing a crucial yet potentially risky dual role.
Okay.
On one hand, banks are like the circulatory system of the economy, channeling savings into productive investments.
Okay.
They connect those who have capital to lend
Right.
with those who need it to build businesses, create jobs, and drive economic activity.
So they're facilitators,
Yes,
making sure money flows where it's needed.
exactly.
Makes sense.
Yeah.
But you said there's another side to this.
This is where it gets a little more complex. Banks also act as creators of what Mises called fiduciary fiduciary media,
Okay.
things like banknotes and deposits.
Hmm.
These are essentially claims on actual money held by the bank.
So like IOUs backed by the bank's reserves.
Precisely.
Okay.
And this is where the potential for trouble arises.
Oh.
Mises was particularly concerned with the practice of fractional reserve banking, a
Okay.
system where banks lend out more money than they actually have in reserves.
Hmm.
They're operating on the assumption that not everyone will demand their money back at the same time.
Hold on. That sounds a bit like a house of cards.
It can be.
What if everyone does decide to withdraw their money all at once?
That's the danger Mises highlighted.
Okay.
While fractional reserve banking seems efficient in expanding credit,
Right.
it can create instability and even lead to financial crises.
Yeah.
Imagine a sudden loss of confidence in the banking system.
Okay.
Everyone rushes to withdraw their money, and boom, the bank doesn't have enough to cover all those claims.
So it's a delicate balancing act.
Yes,
Banks play a vital role.
they do.
But there's also an inherent risk in the way they manage credit.
There is.
I'm sensing some serious foreshadowing here. Did Mises offer any solutions to these potential risks?
He did, and it leads us to his advocacy for a sound money system with gold as the foundation.
Okay.
But to understand why he was so adamant about this, we need to delve deeper into his critiques of government intervention and his vision for a more stable financial system.
Okay, this is getting really interesting. But before we dive into those deeper waters, let's take a quick pause to let all this sink in. When we come back, we'll explore Mises' arguments for a sound money system and why he believed gold was the key to a more stable and prosperous economy. Welcome back. Before the break, we were about to explore why Mises was so keen on gold as the foundation for a sound money system.
Right.
It seems like most countries have moved away from the gold standard. So why was he so convinced it was the answer?
Well, for Mises, gold wasn't just some shiny metal.
Hmm.
It represented a check on power,
Okay.
both the power of banks to create credit out of thin air
Yeah.
and the power of governments to manipulate the economy through monetary policy.
Right.
Remember, he believed money had to emerge organically from the marketplace.
Yeah.
And gold had already proven its worth as a valuable commodity for centuries.
So it's not just about gold itself, it's about what gold represents. A kind of natural limit on those who might want to mess with the system.
Exactly. Tying money to gold for Mises was like setting up guardrails for the economy. It limited how much credit could be created because banks couldn't just print more gold-backed money whenever they felt like it.
Right.
And it prevented governments from simply printing money to finance their spending, which often leads to inflation.
I see where he's coming from. But haven't there been arguments against the gold standard too?
Yes.
I seem to recall criticisms about it being too rigid, maybe even hindering economic growth in certain situations.
You're right, there have been criticisms.
Okay.
Some argue that a gold standard lacks the flexibility needed to respond to changing economic conditions.
Mm.
They say it limits the ability of central banks to adjust the money supply and intervene during crises.
So it's a trade-off between stability and flexibility. Like with gold, you have stability, but maybe lose some ability to react quickly when things go wrong.
That's one way to look at it.
Okay.
But Mises would argue that the supposed flexibility of modern monetary systems is often an illusion. He believed they give governments and central banks too much power, which can actually lead to more instability and economic crises in the long run.
Okay, that's a bold claim.
Yeah.
Can you elaborate on why he was so skeptical of government intervention, even with the best intentions?
Well, for Mises, government manipulation of the money supply was like playing with fire.
Mm.
It inevitably leads to inflation,
Okay.
which, as we discussed earlier, distorts the information carried by prices
Right.
and makes it harder for individuals and businesses to make sound economic decisions.
We touched upon inflation before, but I think it's worth unpacking this further.
Sure.
How does it actually harm people in their daily lives beyond just seeing prices go up at the store?
Think of it this way. Imagine you're planning for your future.
Okay.
You're saving for a down payment on a house or putting money aside for retirement.
Right.
But inflation erodes the purchasing power of your savings.
Yeah.
Suddenly, that dream house seems further out of reach.
Right.
Or you realize you need to save even more to maintain your standard of living in retirement.
So inflation isn't just about prices going up. It's about your hard-earned money buying less over time.
Yes.
It undermines your financial security.
Exactly. And for businesses, inflation makes it incredibly difficult to plan for the future. It distorts the signals they rely on to make investment decisions,
Right.
leading to misallocation of resources and economic instability.
This is making me think about some of the policies being pursued today, especially after the recent crises.
Yes.
We've seen a lot of quantitative easing and other measures that seem to involve injecting massive amounts of money into the economy.
Right.
How would Mises view these actions?
Well, he actually anticipated many of these arguments a century ago.
Hmm.
He dedicated a section of his book to addressing what he called the emergency argument in favor of inflation and the full employment doctrine.
Okay, so what did he say about those arguments?
He acknowledged that governments often resort to inflation in times of crisis, claiming it's necessary to stimulate the economy or finance government spending. But Mises argued that these were short-sighted solutions that ultimately create more problems than they solve.
Hmm.
He saw them as a dangerous form of economic manipulation that undermines sound money and leads to boom and bust cycles.
So even in emergencies, he believed sticking to sound money principles was essential.
Yes.
But wasn't he concerned that a rigid system like the gold standard would stifle economic growth?
Interestingly, Mises argued that true economic growth comes from innovation productivity improvements
Okay.
and sound investment, not from manipulating the money supply. He believed that a stable monetary system based on gold would create a more predictable and secure environment for businesses to flourish and for individuals to prosper.
That makes sense.
Yeah.
If you know the value of money is relatively stable, you're more likely to invest, save, and
Right.
take risks that can lead to genuine economic growth.
Yeah.
It's about creating a foundation of trust in the system.
Precisely. And this is where Mises' analysis of banking and credit systems gets even more interesting. Because while he was a strong critic of fractional reserve banking, he didn't advocate for simply abolishing banks. He understood that they play a crucial role in facilitating economic activity.
So it's not about getting rid of banks, but finding ways to make the system more robust, less prone to those boom and bust cycles he warned about.
Exactly. And this leads us to some of his ideas about alternative credit systems, like the concept of banking based on commodity bills,
Okay.
which he believed could offer a more stable foundation for credit creation.
Okay, I'm really intrigued now. But before we dive into those alternative systems, let's take another quick pause. When we come back, we'll explore how Mises thought we could move towards a sounder, more sustainable financial system, one that serves the needs of individuals and businesses without the dangers of excessive manipulation and inflation. Stay with us. Welcome back to the Deep Dive. We're in the final stretch of our exploration of Mises' The Theory of Money and Credit.
Right.
Before the break, you were teasing us with these commodity bills, a different way of thinking about how banks could operate. It sounds pretty intriguing. Can you break it down for us?
Absolutely. Mises recognized that while fractional reserve banking has its problems, we can't just wish away the need for credit in a modern economy.
Right.
People need loans to start businesses, buy homes, and make investments that drive economic growth. So he explored alternative systems that could provide credit without the inherent instability of banks lending out money they don't actually have.
Okay, so how do these commodity bills fit into this vision?
Imagine a farmer who needs a loan to plant his crops.
Okay.
Instead of going to a bank and getting a loan based on the bank's fractional reserves,
Right.
he could issue a commodity bill backed by the future harvest of those crops. This bill essentially represents a claim on a specific amount of goods, in this case, the farmer's wheat.
So it's like an IOU, but instead of being backed by the promise of repayment in some abstract currency,
Right.
it's tied to something tangible, something with real-world value.
Exactly. And this is what Mises found so appealing about commodity bills. They ground credit in real economic activity, not just the whims of bankers or the availability of fiat money.
Right.
The value of the credit is directly linked to the value of the underlying goods.
That makes a lot of sense. It's like a built-in safety mechanism.
Yes.
If the farmer's crop fails, the bill is worth less.
Right.
But at least it's not contributing to some runaway credit expansion that could destabilize the entire financial system.
Precisely. And if we connect this to the bigger picture,
Yeah.
it aligns perfectly with Mises' vision of a free market economy.
Okay.
In his view, prices, interest rates, and the allocation of credit should be determined by the forces of supply and demand,
Right.
by individuals making choices based on their own needs and calculations, not by government intervention or central bank manipulation.
It all comes back to that core principle of letting the market work its magic with minimal interference.
Yes.
This has been such an eye-opening deep dive.
It has.
We've covered so much ground, from the origins of money to the complexities of banking and credit.
A lot of ground.
But what does this all mean for us, the everyday people, trying to navigate this intricate world of finance?
I think the most important takeaway is to think critically about money.
Yeah.
It's not just this passive tool we use to buy things.
Right?
It's a fundamental element of any society,
Mm.
and understanding its nature, its value, and how it's influenced by various factors,
Yeah.
from government policies to banking practices,
Mm.
can empower you to make more informed financial decisions.
You've definitely made me rethink my relationship with money.
Good.
It's not just about earning and spending.
Right.
There's this whole system at play, and understanding how it works can give us greater control over our financial well-being.
Absolutely. And remember what Mises emphasized. The real value of money lies in its purchasing power, what it can actually buy.
Right.
So keep a close eye on inflation. Be wary of get-rich-quick schemes and think long-term when it comes to your financial goals.
Those are wise words to live by. This deep dive into Mises' work has really challenged my assumptions and given me a new perspective on how our financial system works. It's made me realize how much power we have as individuals to make informed choices about our money, even within a complex system.
I agree with that.
This deep dive has certainly sparked a lot of curiosity for me. I'm definitely going to be exploring more of Mises' work and diving deeper into these fascinating topics. And to our listeners, we encourage you to do the same. Keep those minds curious and never stop questioning the systems that shape our world.